Hi, Daryl Kramer back with another Mortgage Minute. Today, let's explore mortgage amortization extensions. Well, the Bank of Canada has hit pause on the rate hikes recently over the last several months. It's not necessarily translating to relief in the cost of living. Now, many people are still seeking solutions to offset the effects of sky-high grocery prices and other goods on their day-to-day finances. One strategy that could be interesting and make a difference in providing the financial breathing room that they are looking for is a mortgage amortization extension. To start, let's clarify what an amortization period is. It represents the duration that it takes to fully pay off your mortgage through regular payments. Now, an amortization extension, on the other hand, refers to any period beyond your initially qualified amortization. So let's take a look at what lenders and banks would offer an amortization extension. Prime lenders, who are federally regulated, typically do not offer amortization extensions beyond 30 years. However, if your current mortgage has a shorter amortization period, i.e. 20 years, you can extend it when refinancing with them. Alternative mortgage lenders, often referred to as non-bank lenders, may offer extensions of up to 35 to 40 years, provided you have at least 20% down payment or more than 20% equity built up in your home. Now, you may be wondering who can extend their mortgage and why. That is a good question. So, first-time homebuyers are typically limited to a maximum amortization period of 25 to 30 years. Most of them put down less than 20%, which means they do need default mortgage insurance, and this restricts the amortization to a maximum of 25 years. However, if they have 20% or more to put down, they can extend that amortization period beyond 25 years. Now, let's contrast that with people who are renewing their mortgage and have the option to extend their amortization at the time of renewal. For example, they could go from 20 back to 25 years or from 25 years back to 30 years to lower their monthly payments. Now, keep in mind that these options vary based on everybody's individual situation. It is important to understand that extending your mortgage amortization outside of the renewal would require refinancing, which will likely incur penalties and require requalification at the current rates. Nevertheless, it can be a viable solution in certain circumstances. Now, let's imagine a young couple. They bought their first home 5 years ago with a $750,000 mortgage at 3.5% interest. They initially chose a 25-year AM, making a monthly payment of $37.45. Now, at renewal, their new balance owing is $635,000, and the new rates is 5.39. Now, they're considering extending their amortization to keep the monthly payment the same. If they extend it back to 25 years, their monthly payment would now be $39.26, close to the original but still higher. If they look at extending the amortization to 30 years, then their monthly payment would be $36.22, or $123 less than their original mortgage payment. To explore options fully, reach out if this sounds interesting to you, and I'm happy to discuss your specific needs. That's all for today, and bye for now.